thank you to the organizers and also to the previous speakers. Some of the concepts that I want to discuss have actually already been introduced, at least to some extent. And I think that's a good thing, especially with a technical subject like this one. So yeah, my name is Willem van den Brandeler. I used to think my last name was very complicated until I came to Lithuania. But I work at Chainalysis. I'm an account executive taking care of our business in Europe. I'm not going to talk too much about Chainalysis, but just a little bit at the end. My hope for this talk is that I will give you a little bit of insight into the story as it is actually told by the data, and maybe clarify some common misconceptions that can exist around blockchain and cryptocurrencies. So it's a pretty basic agenda. I'm going to start by going over some of the trends, both in blockchain, cryptocurrencies, but also money laundering. So how cryptocurrency and money laundering are actually intersecting, and go over what I believe to be some of the the biggest myths that persist in this area. And to finish, I will give you a little bit of insight and some examples about how my company approaches anti-money laundering on the blockchain. So my company and the other ones in the space, we actually have a very central position in this ecosystem. Cryptocurrency businesses use us to monitor transactions and to make sense of the money flows. Financial institutions also use us for the same reasons, but the cryptocurrency businesses, one of the biggest problems they're facing is not having access to banking accounts. And that's where we come into play. And also law enforcement is using solutions like ours to do investigations into suspicious transactions and possible money laundering. So the real point of this slide is more to tell you where we are getting the data from and where the information in this presentation, how that has been gathered. So a little bit about what's actually going on in the industry at the moment. I'm sure you've heard about cryptocurrency before. You were around in 2017 when there was all of that euphoria, which was then followed by what we call in the industry the crypto winter. But actually at this point, cryptocurrency has matured and is maturing into a new and sophisticated way to transfer value. We're looking at the moment at around 100 billion in weekly transactions. For Bitcoin only, we are seeing 25 billion in on-chain transactions. So here I'm differentiating between off-chain and on-chain. So for example, if you send money to an exchange, it will be from a Bitcoin address to another Bitcoin address. But once you're transacting on the exchange, it's just using the exchange's accounting system. So here I'm differentiating between the two. So transactions are increasing a lot with legal merchant services. So this is a green or a legal area that I'm talking about. This is just since the beginning of the year, actually February, we're seeing significant increases in the extent to which cryptocurrency is being used to pay for goods or services. Which is an encouraging sign. This is what we mean when we talk about adoption. And then we also see a huge increase in ATMs, which is something that was discussed a little bit earlier. This is a bit more of a gray area. And like the previous speaker said, it's really depending on how the people that are installing these ATMs, how they are using them. Are they doing KYC? In some cases, the ATMs will actually make a photo of you every time you use it. So it is a gray area. And then, of course, there are some more difficult topics. Here, the 18 billion actually refers to the aggregate of risky plus illegal activity. So here we are including things like peer-to-peer exchanges and mixing. Peer-to-peer exchanges were touched upon a bit earlier. Mixing, I will give some more information about a bit later. But really the point of this is that there is risk today, and this is limiting growth of the industry. As long as a company cannot demonstrate beyond a reasonable doubt that they have done everything they could to limit their exposure to these types of risky entities, it's extremely hard for them to get banking licenses, or bank accounts. So here I'm talking about 3 different categories of criminal activity. The first one, hacks at exchanges, make up really the bulk of the criminal activity if we're talking in dollar value. It's a bit of a billions, hundreds of millions, and tens of millions problem. Hacks at exchanges make up a big part of this, and we're talking in the billions. Darknet market activity, so buying and selling illegal goods on darknet markets. Well, actually, it doesn't always have to be illegal goods, but in most cases, this is what we are talking about. Here, I think this is last year, about 600 million of proceeds were pushed through these platforms. And finally, scams, and often these are having to do with Ethereum. They make up about 2% of this activity. Scammers can be extremely creative, and I'll talk about this a little bit more later as well. So how do criminals process these funds once they have been generated? It's not that different from traditional money laundering. The placement, layering, and integration heuristic is still true. It's just that the technology is giving new ways of obfuscating the origin and the destination of the money. So I mentioned mixers a little bit earlier. This is something that we see quite a lot. This is just a service that will take in funds from lots of different people. And when you want to withdraw your money, they will give it back to you in a way that makes it hard for law enforcement to say that these were the same funds that we were talking about at the beginning. So maybe they will send it to you, the money back, but in several smaller payments. Or maybe they will put a delay in time between the moment you deposited the money and you get it back. All this so that it's hard for law enforcement or a service, a company to say that this money has a link to criminal activity. And of course, it's not just mixers. There's a lot of ways that money laundering is happening. High-risk exchanges, so these are platforms that do not have the proper checks and balances in place. There's a bunch of them in China, for example, but that's definitely not where it's limited to. So criminals will sometimes send stolen funds or the proceeds from criminal activity in cryptocurrency directly to an exchange like that to cash out in fiat currency. Online gambling. Gambling is not illegal in every jurisdiction. You can have extremely dirty money that came from drug-related activity or something else and send it to an online gambling platform, play a little bit, then withdraw everything. You just retainted that money. It went from being extremely dirty to so-so. And another example, cryptocurrency mining. You could have dirty funds, send them to a mining pool, which is a group of individuals who are pooling together computing resources to generate new cryptocurrency, and then withdraw it again, the same idea as with online gambling. Or you could actually buy hardware with your dirty funds and start mining new Bitcoin, which is clean. So these are things that are happening. And it's not limited to this. There's a lot more technology that is being used. People are being very creative. You could, for example, have a cryptocurrency wallet, which is integrating a mixing tool. Or there's other types of transactions that are being made possible with technology, and it's making the job more difficult for law enforcement. But the idea that there's nothing that can be done and that it's impossible to trace these transactions, it persists a lot, and it's not true. I meet regularly with government agencies around the world to explain what we do at Chainalysis, and I'm really surprised how often I am told that nothing was being done about this because they thought that it was impossible to trace even a Bitcoin transaction. But I guess when you dive deeper in the subject, maybe you will start thinking that it's a really bad idea to use cryptocurrency for criminal activity if you start understanding the concept of a public ledger. Yeah, so these are some of the myths that I want to dispel here. They are definitely more traceable than previously thought. There are a lot of cases of individual criminals or criminal organizations that are being arrested and sent to jail. BTCE was mentioned earlier. The mastermind behind it was arrested during a holiday in Greece a few years ago. A lot of money was laundered through this exchange. I'm going to give you a bit more info on this in a minute, but yeah, this guy is in jail. He's now having to choose between being extradited to the US or to Russia, and I think he's leaning towards Russia. Yeah. And a lot of individual drug dealers are being arrested. I couldn't fit too much on this slide, but there are many, many examples of people who will make a mistake. Either they're not using the technology properly, or they're leaving a trail of evidence online. A lot of the law enforcement that we are working with is educating itself around such cases and recycling the methodology to arrest more people. Another example of a very successful operation, I think this one is interesting because it actually involved a lot of international cooperation between different government agencies. This was the takedown of the Hansa darknet marketplace. It's an operation that, like I said, involved the cooperation of several different governments. It's actually interesting because they took over the servers of the illegal website and kept them online. So for several months, they actually had access to all of the data, and they've been able to arrest a lot of the individual drug dealers that were using the platform. So coming back to BTCE, 4 billion allegedly laundered, so we're talking about big money. It's interesting because they actually are accused of laundering 300,000 bitcoins that were stolen from Mt. Gox. Mt. Gox is one of the early Bitcoin exchanges that was hacked around 2014, I believe. 650,000 bitcoins were stolen from Mt. Gox, which is about 5% of the current outstanding Bitcoin in circulation, so it's a huge amount. Some of the Bitcoin that was stolen from Mt. Gox was actually laundered through Mt. Gox, which I think is pretty funny. It's like me coming up to you, stealing your phone, leaving the room, coming back an hour later and trying to sell it to you. So this is another interesting example. Mixers. So mixers are also being taken down. The new regulation is forcing these services to do KYC, and it's going completely against their existential purpose. So I'm wondering how many mixers will publicly still be in existence in the next few years. My guess is not that many. And this is really to give you an idea, based on our analysis and other companies in the space, the actual share of criminal activity relative to all of the activity in cryptocurrency is actually very small. So here we are only taking into account Bitcoin and Ethereum, and there's other cryptocurrencies, but it should still be an insightful metric. And yeah, another myth that persists is that a lot of the companies in this space decided to work in crypto because it's the Wild West, there's no regulation, and they want to take advantage of this new growing ecosystem. But actually, and I know this also from first-hand experience, from meeting with a lot of these companies, they're being extremely proactive about regulation. I regularly have conversations with companies that don't feel much pressure from regulation, but from their own initiative to be legitimate and attract more clients, they will actually put into place processes before they are officially required. So I think that's very encouraging. And just a few words about how we're doing things at Chainalysis. We make it more difficult, or how should I say, we make it easier for companies to avoid exposure to funds that have the wrong associations. So this can be laundered money, but also we will identify entities. For example, if they have been sanctioned or put on a list, blacklists, this is something that we work with. The absolute worst typologies that we try to identify have to do with terrorist financing and child abuse. I couldn't use a lot of examples of those in the presentation. We have a lot of active investigations around this, and there's just not a lot of information that can be shared publicly. But these are some of the typologies. And from a technical standpoint, how do we actually do this? It was already explained a little bit, but yeah, there's millions and millions and millions of addresses on the blockchain. They are just alphanumeric sequences, so they don't really tell you much intuitively. But for example, a service like Coinbase, which is one of the leading exchanges, they have about, last time I checked, 59 million addresses that are controlled by them. So what we do is using human analysts and also algorithms, we will cluster the addresses that belong or controlled by the same entities. Our analysts will actually make deposits and withdrawals on all sorts of services, also on the dark web, so that we can map the ins and the outs, and so that we can start understanding who is who on the blockchain. We also use a lot of open source information, open source intelligence. So for example, if a Bitcoin address has been mentioned on Facebook or maybe a dark web forum, we have crawler algorithms that will capture that, look at all of the contextual information around it, and that is really useful for investigators. A lot of cases have been solved using a blog post from 2014 or like stuff like this. These are a couple examples of graphs that investigators using our software built to try to track money flows. In many cases, the graphs will be more simple looking, and in some cases, they will be much more complicated. But this is just to give you an idea of how much effort criminals will put into the obfuscation of the money flows. A lot of the arrests that are happening at the moment are actually with lesser sophisticated criminals. But it was mentioned earlier that one of the big risks was people not educating themselves, especially law enforcement. It's really important that in this game of cat and mouse, we and also law enforcement become as sophisticated with this as possible. And just a few more insights that are derived from Chainalysis. When you're looking at darknet markets, where do their funds come from? Who is sending money to darknet markets? It's surprising to see that more than half the time it's coming from an exchange. So an exchange, they can see using a solution like ours where the money is coming from, but also where it is going. So mixers, where do they receive money from? They also receive money a lot of the time from exchanges. So that is something that a cryptocurrency service using a solution like ours, they can flag that instantly. So today we work with three main pillars or verticals, as I said at the beginning: law enforcement and regulators, cryptocurrency businesses, and traditional financial institutions. I hope that this quick overview of what's happening in the ecosystem and the technology that is evolving to manage the compliance and the investigation aspects when we're talking about law enforcement, I hope that this is giving you a more nuanced view of what's actually going on. It's not all black, and I think that there are a lot of opportunities in this new industry. Thank you very much.